Hello, everyone, and I am super excited about this week's Todd Talks episode. We're going to get into the inside scoop, the insider baseball, the inside information on what's going on with mortgage rates, because I'm seeing something that I've never seen before in my 20-year career, and let me lay the groundwork for that. So, as a consumer, and as most Americans believe, that the Federal Reserve controls interest rates, and the fact is they do not control mortgage interest rates. When they lower their rates, the Federal Reserve affects the cost of home equity lines of credit, adjustable rate mortgages, which no one likes and wants, car loans, boat loans, RV loans, and business loans. So it's a big chunk of the economy. But notice I didn't say mortgage lending. Mortgages have always been tied to the 10-year Treasury bond. And the price of those bonds are impacted by what's going on in the economy. In the last 4 years, they shot up to higher levels that we haven't seen in years because of inflation and the way the bond market was looking at what was going on with the U.S. federal deficit, which has ballooned to larger than we've ever had. And because of that, without getting the deficit under control, we were going to always have a problem with mortgage rates until it was resolved. I've always said inflation, but it's not just inflation, it's also getting inflation down. So the current U.S. Treasury, the new U.S. Treasury Secretary, his team, and other members of the cabinets on the finance side, they are doing something I've never seen before. They're openly stating this. I'm bringing this out because many of you probably don't listen to some of this kind of news. I do because it involves finance. But they're openly stating, we're focused on the 10-year Treasury. I've never heard the government say that before. And that's a big deal. And so how do they do that? By cutting spending, by cutting the waste, by having a budget that's actually not a huge deficit every year. That's going to drive mortgage rates really low. And just the action that they're starting early on of taking that has already shown up with rates have trended lower for the last 4 weeks. In fact, last week, the average rate was 7.125. At the start of this week, it was 6.89%. But let me tell you guys, I'm able to quote people in the low sixes and sometimes even fives on a conventional loan. And we're now seeing fives on the government loans. Those are huge differences, and it's going to continue to go down. What does that mean? That means that this mortgage rate is going to unthaw and allow you to make the moves you've been waiting on. Now, I want to throw something out there to you that I've been preaching for a long time. As the momentum picks up, and I'd be surprised if it happens in a month. I think my prediction is probably a slow rolling out of this. But as mortgage rates continue to fall and as word continues to spread going to the spring buying market, you're going to see buyers come out of the woodwork. If you're a seller, that's good that you'll get more buyers, but it means you have less likely of a chance that the new home you're buying will accept a contingency offer. So keep that in mind. You might want to move forward now based on that. If you're a first-time home buyer, or maybe you're not a first-time home buyer, but you're currently renting, think about getting in now, because you can get in most cases, buy a house, seller pay title, less competition. You're not in a multiple offer situation yet. And in many cases, you can get the seller to pay some closing costs, which I can get those really low rates for you, including 1 year off the first year's interest rate. So give me a call to build you a great mortgage plan. If you have family or friends or others that we're talking about buying, text me, shoot me an email, send me over their name, their cell phone. I'll reach out to them. We'll take great care of them for you. And we hope, and if you're a realtor having to watch this, same thing, send me over your borrowers. I'll get them excited with a great mortgage plan to take advantage of this new trend. So thanks so much, and hope you have a wonderful day.